Well, the S&P 500 and the NASDAQ both taking a breather after hitting records yesterday. With earnings season kicking off, will investor focus now turn to profits and outlooks? Well, let's ask our next guest, Early Investments Vice Chairman Charlie Babrinskoy and Payne Capital Management Senior Wealth Advisor Courtney Garcia. Guys, welcome. Charlie, Ariel, known for value, and it had been kind of a rough slog versus the S&P, but you're beating the S&P this year with small caps?
Yeah, you're absolutely right. Large cap growth has been where all the action has been for something like 6 out of the last 7 years, and this year. But then in the third quarter, we had a wonderful rotation, and the fund I run, Ariel Focus, had its best quarter ever relative to the benchmark, and it was really because of small cap value. We had a lot of stocks trading at less than 13 times earnings that did very, very well in the quarter. Over the last 100 years, that's normal. Small cap value has been the best performing sector by far, but the last 6 or 7 have not been the story, so we're hoping we get a return to the historical place.
Courtney, you think Charlie's onto something here? We're talking a lot about how top-heavy the major indices are. The meme stocks are back. Is it maybe time for small cap value?
Yeah, there's a lot of optimism when it comes to small caps here. I think coming into the year, people were very optimistic about it. And it didn't have the kind of returns that people were expecting. But especially as we're finally seeing interest rates come down, if the economy continues to be strong, I do think the small caps do continue to have a good setup here. And when it comes to this really heavily concentrated market, we're finding a lot of clients who haven't taken any profits are a lot more exposed to this AI trade than they realize. It's a really good time to say, you know what, probably time to take some profits and look at other areas, whether that's small caps, whether that's international. There's plenty of areas that are not as high valuations. It's a really good time to look at that.
So, Courtney, let's dig a little deeper into that, because I'm looking at your notes here, and you say there's a generational opportunity to allocate capital to everything that is not tech and gold.
Exactly. Yeah, you know, I don't think this tech rally is over necessarily. I mean, there's a lot of conversation about, are we in a bubble? And I think that's happening because valuations are becoming stretched. And it's not to say that that can't keep going higher, but there are plenty of other bargains out there. And I think this is a really important time that you want to be well diversified. And international is actually a really good example. So a lot of people don't realize that international has actually been outperforming the S&P 500 this year. But even with that, it actually has more attractive valuations. And especially if the dollar keeps weakening, that can continue to strengthen. So I don't want to get out of the tech trade. I just think you want to make sure you're broadening out right now, and it is a prime time to do so.
Charlie, where do you see bargains right now? What are some of the names that you like?
Yeah, so I think, frankly, we are still worried about the dollar. We are still worried about deficits. We are still worried about the impact of tariffs on the economy. And so that makes us like to own things that do okay even when the dollar is weak. And obviously that's one of the areas is oil and energy. Energy has been out of favor. It's been one of the worst performing sectors. And so there are some bargains. Gold is hitting records, but Barrick Gold is trading at only 13 times earnings. And then there are a lot of energy companies. If you think we're really going to need a lot of electricity to power AI, that electricity is going to come from traditional sources and renewables, but natural gas is going to be a big part of it. And so some oil and gas companies are going to do well.
Courtney, how are you playing emerging markets?
Emerging markets, like we talked about earlier, absolutely you want that as a piece of your portfolio, especially with the dollar weakening, which Charles also just pointed out here, I think is a really good place to have your money. I also completely agree on the energy trade. That actually really is part of the AI trade. There is not enough energy infrastructure to go around right now for this AI build out, and that is going to be a long-term issue. So I think that's absolutely something that you want to play here. I think the only thing I disagree with is gold is really being talked about a lot right now, and it has done fantastic this year, which is great. We have that in our portfolio as a diversifier. It's doing really well, but long-term really has not been that great of an investment. I mean, if you look at it from the peak of 1980, it's just now keeping pace with inflation, whereas the S&P 500 is up over like 4,200% over that time frame. So you want to have it, but I wouldn't get too overexposed to gold here on this run that it's already had.